Everybody, welcome to Forex Trading Analysis with Synergy FX. It's 10:37 on July 9th, Monday. And today we're going to be looking at a few pairs, but quick risk disclaimer before we get started. As foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So, a few pairs I want to take a look at today. We really had, I'm not going to lie, a really boring day in the markets today. We've seen a little bit of further move in the in this bar right here as it continued to push down from the pound. And I was wish I did this video a couple hours ago because I was going to start talking about how the 100 is very close for the pound, and I do think that we are going to start to fall off a little bit for the pound. But if we do throw on the hourly chart, or the daily chart, sorry, we have started to sort of break out of this consolidated range. So as you see the price here at around 0.55144, we sort of failed to break back into that and it's moved back down. And it looks like that level might possibly be holding as a possible resistance, and we could see a rotation back down to the downside. I do like the pound to fall possibly to 1.5 in the next few years, but I think eventually it will start to rise again. I think that it's going to be starting to be pulled down by the financial crisis in Europe, obviously, and as America sort of continues to be pushed towards that inevitable outcome, I do think that the pound will also be brought down by that. Because the pound is very correlated to financial news, and if it's two neighbors to the east and west are both experiencing a lot of turmoil in the financial markets, it's not going to be a currency that's exactly very safe to hold in the long run. So, like I said, I am very bearish of the pound. Not so as much as I am the euro, though, and that's what I think about the pound. So if we do look at this chart again, we are sort of starting this push from the downside. If you are looking to enter a short trade, possibly maybe a little bit too late, but I think we do still have a few pips to run down for this. Obviously, the lower levels here at around 1.547, and continuing lower, we should hit at least this level, and if not push a little bit further past it. In terms of the euro, quick analysis of the euro right now is that I do think that we are in a continuation of this downtrend. We have started to push down a little bit. One thing that does excite me about the euro is that we have started to hit around the 1.2s level, which is going to be starting an area where people are going to be looking to buy again. 1.229 we are currently right now, and I do think that we are getting a little bit extended to the downside. We have been falling for quite some time, and they're not exactly very fast falls. Usually they happen over the course of a few days and then they'll rise back up. So that does mean buyers are definitely still left in this market for the euro. And while I do think that the overall trend will continue to be down up to around 1.12, that's not for at least another 3 to 6 months, possibly a year. And I do think that for now we could see a little bit of a consolidation and possibly push back to the upside if we do fail to hold above certain levels. So the first level I'll be looking at for areas of support, obviously the lowest low at around 1.226, and if we can break this area of resistance around 1.234, then I will be looking for a continuation to push to the upside and possibly a push back up to the 100 and 200 day moving averages, which are the closest targets that I will be targeting. Last pair I want to take a look at is gold right now. I'm very, very, very bullish on gold. Read a lot of what Jim Rogers has to say about gold, and what gold is it's a commodity that people put their money in when they're uncertain about almost everything else in the world. So since the world is in such turmoil right now, gold should continue to go nowhere but up. If we throw on a monthly chart, gold has been going up for somewhat of 11 years or so. This is only a 5-year chart, but gold has been going up for quite some time, and I don't think that will stop. Gold sort of has a well-deserved consolidation right now, especially over the past few weeks. as we've seen barely any movements in gold. But I do think that we will start to see a continuation and push back to the upside once people kind of start to buy back into the whole fiat money system. So, like I said, I am very, very bullish gold, and if it continues to go lower, then we'll be looking to buy even more of it, possibly around 1.4, or sorry, 1400, and down to 1300 as well. So that is around the 200-week moving average, which is coincidental, but also going to be a nice area of support. So those are my views on gold. Please follow us during the week at SynergyFX, and we'll be posting more updates, so feel free to do that, and good luck trading.